Hi, my name is Ramya Sumithra, and I'm going to be helping you with microeconomics. First off, I'd like to begin by saying begin by saying that you're all taking all the precautions as necessary during these scary times and not going out if not absolutely necessary. And without further ado, let's jump in. Oh, also, I'd like you all to take a paper and a pen and keep it next to you and keep jotting whatever you need, whatever you think is important as we go on. In this lecture, I hope to be familiarizing you with what seem to be a lot of difficult words, unfamiliar words. We're gonna go from what economics is, what microeconomics is, how it differs from macroeconomics, positive and normative economics. We're gonna study what the three central problems of an economy are and what the solutions are. um, the three types of markets we're going to study, and we're going to be introduced to something called a PPF. Um, let's begin. Economics is a subject matter that relates to the use of scarce resources. Right away, we are seeing something new here, a keyword, scarce resources. What does scarce mean? Scarce just means that relative to the wants that we have, the resources are finite, they are limited. There are only a few resources as compared to the rest of us and our needs, right? So, scarce resources. Economics is a subject that simply deals with the scarce resources and the choices made as to how to use those resources, right? Because the wants are unlimited, the use of these resources are unlimited, but there's a limited number of resources. So how do we balance these wants with the resources in in a manner such that the individuals um, have their wealth maximized, the households have their wealth maximized, and also the economy as a whole is also growing up, right? That's what economics is. So, what does microeconomics mean? Micro means small, English, right? Micro, small. Um, that does not mean that it is something to do with a smaller scale or anything. It just means that the focus of microeconomics is a little smaller in the sense that microeconomics looks at a single market or the smaller units that form the part of this market, like individual businesses, an individual household, maybe individual firms, right? um, Economics, okay, who all can use economics, do you think? There's three kinds of users for economics, right? Consumers, and they face the problems of what to buy, what not to buy, and how much can they buy with the given resources. You all know this, you all are familiar with these problems, right? Say you have $100, you go out, you can say get two packets of biscuits or four packets of milk, maybe. You can only buy, say, four packets of milk or two packets of biscuits, right? You only have 100 rupees. If you want both of those things, you're gonna need $200. But say you only have $100 in your hand right now, you're gonna choose one or the other, right? Or you're gonna choose a combination of these two goods in a way such that you get a little bit of both of these goods in your 100 rupees. So what to buy, what not to buy. The shop has a million other things. You want either the biscuit or the milk, right? So what to buy and what not to buy, and how much can you buy with the given resources. What are you aiming for? You're aiming for the satisfaction, your own satisfaction, right? The second type of users are the producers. Producers in the sense businesses, basically small firms, big firms. What do they have to decide? They have to decide what they want to produce. um, Depending on the economy that they're in, what product do they want to produce, and what do they not want to produce, and how much of this product do they want to produce, right? And what does the producer aim for? He aims for his profit maximization, right? If he's starting a business, his aim is to maximize his profit. Simple. um, Third type of user is the government. The government has its revenue in the form of the taxes that we all pay, right? Direct, indirect, whatever. Your dad and mom probably pay their income taxes. Whatever we buy, there's some sort of a indirect tax on there. We've seen SGST and CGST in all sorts of bills, right? Those are the revenue for the government. How do they use all of this all of these taxes? One, the first question is that how do they use all of these taxes? Um, in the sense that there's two ways they can use it. A, they can spend it on consumption goods like food or automobiles, or they can invest it in public goods that all of us can use, in the sense that there's bridges, there's roads, they can build hospitals. Public goods versus consumption goods, both are important, both need to be invested in, but how much and exactly precisely where? That is the second problem. The government the government aims at maximizing social welfare, good for all of us, good for everybody that they govern, right? um, Microeconomics and macroeconomics are slightly different, slightly, right? Microeconomics, like we discussed, focuses on the smaller individual units, right? Businesses, individual consumers, individual firms, individual investors, and workers, employees. Macroeconomics focuses on an economy on the whole, as a whole. Say India as an economy as a whole, right? Or the world economy as a whole, macroeconomics. But say I am trying to um, do a market research, or say, for example, highlighter pens. Then I just need to go to, say, Faber-Castell or Camlin or whichever company manufactures highlighters, right? It's a market. It's one industry. Or if I'm just looking at, say, Faber-Castell, it's micro. I'm looking at one firm. If I'm looking at my own household expenses, one household, micro. My own personal expenses, again, individual, micro, right? Um, Microeconomics is also called as price theory. We'll see why later on. Macroeconomics is known as income theory. Microeconomics deals with the allocation of resources, while macro deals with the growth and development of resources, right? We'll go ahead now. Have you like written it down? Pause the video, maybe write it down. We'll go ahead. Okay, so economic problems. Why do these economic problems arise? Why do they arise? And why do we need economics in the first place? Because A, resources are infinite. Resources are finite. I'm so sorry. Resources are finite. Wants are infinite. It would be a good world if resources were infinite. It would be some sort of a utopia. We wouldn't actually need economics if we had unlimited resources, because then there would be no difference between the rich and the poor. If the resources were unlimited, everybody could produce whatever they wanted and however much they wanted, right? In that case, there wouldn't be the whole concept of economics where there's limited resources and unlimited wants, and we have to balance these two, reconcile these two, right? So if there was unlimited resources, we wouldn't actually need economics. But since our resources are definitely finite, limited, we need economics. The wants are infinite. By finite, again, I would like to emphasize on this point. Finite does not mean a small amount of resources. It just means that they are limited, as opposed to the wants which are infinite. However much you might have, you will still want more, right? Even Jeff Bezos probably wants more money or more luxuries in life or whatever. It's like your wants are infinite, but no matter how much you already have, your resources are finite. They will have a limit. It is a finite number. Resources cannot be infinite, basically, right? And the third thing is resources have alternative uses. So say I have a 1,000 rupees, right, in my bank account, but I can use it in 100 different ways. I could go to a movie, probably not now because coronavirus, you know what I'm saying. But I can use these 1,000 bucks in a million different ways. I could buy something, I could invest it, I could buy a share or something, I could buy some chappal or whatever. You know what I'm saying, right? I can use it in a million different ways. So the resources that I have are finite. The wants I have are infinite, and these very resources I can actually use it for a million different uses. So how do I use it? Is why economics is relevant. Right. So we'll go to positive versus normative economics now. Positive economics deals with what is, what was, and what would be. Present, past, future, right? It deals with facts and figures basically. So positive economics uh, has no connotation with the English positive or the mathematical positive. Uh, it just means it deals with facts and verifiable figures, right? It means that there's little scope for debate, right? So if I'm saying I am one individual, it's fact. You can't combat me like saying nahi or two. It's a fact. That's all. There's no debate ka scope here, right? That is, say, a positive statement in this context. There's three examples of statements over here. Read it and see that they are fixed. They are facts. They are figures. There's a source there. There's a verified survey over there. Um, and there's a fact and a figure that is fixed, right? There's no uncertainty there. This is called a positive economic statement. Um, Characteristics of these positive statements are like we discussed before. See, they highlight the nature and extent of economic problems relating to the past, the present, or the future. The time zone doesn't matter. What they deal with is economic problems, are facts and figures. They are verifiable based on empirical data, right? Um, Scientific, mathematical data. And there is limited to no scope for debates in here, no discussions, no debates. It's a fact, it's a simple fact. Uh, and there's no value judgment as such, there's no moral judgment. Like, say, if I had a survey, I found out the result is a positive statement. What I think of these results does not matter in positive economics. What I, as an economist, think, or say, I, as a human being, think, does not matter. The fact and the figure, that's it. Normative economics is the reverse. So, say I have fact and a figure plus my moral value judgment, what I think, what my opinion is included in normative economics. So, say I am an economist, my friend is an economist, we both do a survey, and then we both get our figures, and we get the same figure, but the opinions that we have may differ. And it is possible in normative economics because the opinion of person to person cannot be expected ever to be the same, right? Two people, two absolutely different opinions. Possible, definitely possible, and is what happens usually, right? So, normative economics is what we can say deals with the what ought to be. My moral addition is there, my value judgment is there. The statements on your screen, the examples, if you read them, they're opinionated. There's a point of view there. It's not just facts, fact and figure. It's also an opinion and the what the statement, the writer of the statement feels it should be, how it should be, how it ought to be, right? So the characteristics of normative statements are as such. They focus on what ought to be, they involve value moral judgment, they are not usually verifiable, and there's a lot of scope for debate and discussion, right? Lot of scope, because again, opinion to opinion matters. What is right for me may not be right for you, not even close. We can discuss for days on end and still not reach a conclusion because opinions vary, right? And yeah, see, they vary from economics to economics, because they indicate opinions. Moving ahead. Okay, so Adam Smith, this man, we call him the intellectual father of modern economics. Why? Um, because he wrote a book called The Wealth of Nations, in which he considered a lot of principles that are still used in economics to this day, right? Determination of prices, supply, the whole jazz that you will study later on in this subject. And the most famous part about his book, however, was the free hand analogy, invisible hand analogy. This had to do with the free market, right? Open market. This is the system that, say, the USA and the UK follow, right? They are capitalist. And what Adam Smith um, proposed in his book was that when the businesses act for their own benefit, in the larger picture, they'll end up doing some good for the social welfare. So basically, what he said was, what he found out in his theory was, unintended greater social good could arise from businessmen that were acting for their own profit maximization, for their own self interest, for their business propagation, right? And because of all the groundbreaking research that he did, he is called the intellectual forefather of modern economics. So, what is an economy? An economy is a whole system. You remember EVS back in fourth class or something? There was a whole circle, uh, you know, like a whole pyramid of the lion eats the sheep and the sheep eat grass and all of that, the whole pyramid, food pyramid. Like that, an economy is also a system, an ecosystem of sorts, which results in everybody earning their living, working and earning their living. Simple, that's an economy. There's 100 different definitions. There's one in your textbook. You can write that down, memorize that. But simple terms, an economy is a system by which people of an area, any area, say a colony, a state, a country as a whole, the world, an economy basically on geographical area towards any area at a point, the economy is the system by which the people in this area are earning their living. That's it. Simple. Right? There's three types of economies now. We're gonna go into depth for each one, but the names are right here. One, a centrally planned economy. Second, a free economy, and third, a mixed economy. Right? What is centrally planned economy? Okay, so centrally planned economy is, there's a government, there's a central authority or such, any authority. There's a dictator, maybe there's an authoritarian leader, maybe there's a government, say, and they decide everything. They own all the resources for production. The private business and the individuals can probably not own any property on their own. They can't decide what they want to produce. The government decides what the country has to produce. The government employs everybody there. They pay everybody their wages basically. The government decides what to produce, how much of it to produce, how to distribute whatever they have produced. They um, basically they decide everything for you, right? The economic decisions, where you want to invest, what you want to consume, what you want to exchange, the trade, everything controlled by the government. Why? Ideally, in an ideal world, a centrally planned economy focuses on social welfare maximization. What happens in real life might slightly vary, but ideally, uh, textbook wise, a centrally planned economy focuses on social welfare the most, right? A socialist government of sorts, say. As of today, in the modern world, there's nothing that exactly abides by this, but China is the closest example we have right now, right? The former USSR, Russia before USSR, it was called, no? That was a centrally planned economy. Even Russia today is slightly that way. North Korea is centrally planned economy, but social welfare is a little doubtful there because Kim Jong Un is an authoritarian leader who is probably not so social welfare oriented. Right. Moving on, a free market economy is a capitalist economy basically, closest to that. So the USA today, the businessmen decide what they want to produce, how much of it they want to produce, for what price they want to sell it in the market, for whom they are producing it. They'll all of it is up to the businessman, right? The consumer is the king. They will produce for whoever will pay them, right? Rich, poor, good, bad does not matter. The capitalist's motive is profit maximization. They do not care about social welfare, right? Why should they? They have a business, they're intent on running it. Simple. Their motive is profit maximization. Whoever pays them, they'll produce for them, and the decisions is their own, are their own. The government has little to no interference whatsoever, right? The economic activities, what they want to invest in, what they want to exchange, what they want to trade in, everything is up to the businessman. The UK and the USA, like I said, are the major examples we know today. Then there's a mixed economy, right? We are a mixed economy. What is a mixed economy? The businesses have the freedom to do whatever they want to do, right? But the government is always, they'll regulate. है ना? So, like a capitalist government, the businessmen have their freedom to do whatever they want. The market forces can come into play. They will produce for whoever is paying them good money. All of that is fine. But the government is constantly there to regulate just in case this gets out of hand. Okay? The focus here is both profit maximization and social welfare. The biggest example of this is okay, so you all know Godrej ka Nature's Basket. It's here, like in Bangalore, it's there, in Delhi, it's there, Bombay, everywhere, the big cities. Nature's Basket is there, no? You go in there, a water bottle would cost like 500 bucks easy, right? That is there. And there's also the ration shops in the, have you seen any ration shops? There's ration cards and you get like rice ka grains over there every month. PDS basically, public distribution system, right? PDS is social welfare, right? The government is taking that initiative so as to assist those who need such financial assistance. And there's also this whole ultra uber rich Ambani lifestyle also happening simultaneously. Why is that? Because we are a mixed economy. There's elements of both a capitalist and a socialist economy in the mixed economy. We are a mix and a match. So Indian, right? Consumer is king, but social welfare is also ever present. The prices are pretty much decided by the market forces, but the government can regulate these prices. That's it. It's simple, no? Now we'll come to the central problems of an economy. There's three problems, right? What to produce and how much of it to produce. First problem. Second problem, how to produce. We'll get to that. And the third one is for whom to produce. I'll explain. Don't panic. It's all easy. What to produce and how much of it to produce. In the sense that what goods will sell in this economy. Say I'm a business, I have a business, I have to produce something so as to sell. What should I produce? What good or service should I produce so that I get my profit, a nice amount of profit, hopefully, and there's demand for this. First off, there's demand for my product, people are buying it, and I'm getting profit. What is this one good, and how much of it should I produce so as to strike that balance? I don't want dead stock lying in my warehouse, right? Thoda sa hard, I'll tell you. Basically, what to produce, there's two kind of goods, something called a producer good or a consumer good, right? Say there's an Oreo ka biscuit packet, that's a consumer good straight up. Why? Because you get it, it's 30 bucks, you get it, you come home, you dunk it in milk and you eat it, done, you consumed it. Over. A producer good is the machine that makes that Oreo in the Cadbury factory, right? So, if I'm a producer, I have a choice. Should I produce Oreos or should I produce the Oreo producing biscuit? Oreo producing machine? Uh, it's always a choice, right? I'll see what suits me. I'll see what seems to be more profitable to me. I'll produce that. Simple, right? Then there is how to produce. By how, we mean the technique of production. There's two types, right? There's labor intensive technique and there's the capital intensive technique. Mostly It depends on how cheap the labor is, and from a social welfare point of view, it depends on how much unemployment there is. I'll explain. Say in a country like Canada, the labor is not cheap, right? The labor is expensive, and the population is kind of less, so people are needed for other jobs as well. So if I want to open a factory in Canada, I'd mostly probably buy 100 machines and hire 100 people to run those machines, and that's it. I just need a man to be there while the machine is doing its work. Done. That's it. I just need 100 people in a whole factory. That's all. But say I set up a factory in India or Bangladesh, right? The labor is cheap. We have a huge population and there's unemployment. So if I'm setting up a factory in India, 100 machines and 100 people might be a little, I don't know, silly in the sense that I might as well hire 10,000 people who will work for me cheaper than what I would have had to spend for the machines because the labor is so cheap here, right? So capital and labor intensive are basically nothing but labor intensive money. Your your technique of production involves a lot more manual labor than it involves machinery. Capital intensive money, it involves a lot more machinery than manual labor. That's it. Simple, right? And for whom to produce? So broadly speaking, um, any economy, we have two categories of people, rich and the poor, right? For whom am I producing? From a capitalist point of view, mostly I'd be producing for the rich because whoever pays me money, I'm producing for them, simple. But from a social welfare point of view, I'd probably produce for the poor because I need everybody in my country to be having basic amenities, basic food, and livelihood, right? Having said that, if I'm a capitalist government and I'm trying to produce for my um, economically weaker sections, I might be having to sacrifice a little bit of my market forces. I might be damaging my own market, and vice versa. If I'm a socialist government and I'm letting my businessmen produce for whoever is paying them the most, I might end up damaging the social welfare system, right? So that's another problem. The third problem, the central problem, third central problem of an economy. What are the answers to this then? Varies from economy to economy, right? We'll see the free economy first. The first problem, what to produce? A free economy. They produce whatever the businessmen decide based on the motive of profit maximization and nothing else. The second problem, how to produce it? Producers decide. Whatever they feel is cost minimizing and more efficient, they'll do it. Again, comes back to the profit maximization point, right? If I find labor intensive method to be cheaper for my business, I'll go for it. If I find capital intensive method a little cheaper, I'll go for it because at the end of the day, if I reduce my costs, I'm making more profit. That's all I want as a businessman. And for whom will I produce? Obviously, I'll produce for whoever pays me the highest price. That's all. Having said that, in a free economy, you see a glaring gap, an income disparity between the rich and the poor for this very reason, because all the businesses are producing for whoever is paying them the most, right? That's the problem that the USA is facing right now. There's either the whole debate about the if you have been following the news, the Democratic debate was running around whether there should be billionaires at all because they were making money. The best example would be Jeff Bezos and Amazon delivery boy. Maybe they're working for the same company, and while Jeff Bezos is the richest man on the on the planet, a delivery guy was like is working 24 into 7 probably and still barely making ends meet, right? The glaring gap between the rich and the poor is usually expected in a free economy. Coming to the centrally planned economy, the first problem, what to produce. The government decides. Uh, the decision lies with the central authority or the government or the dictator, whoever. The businessmen or the employees or the public in general do not get to decide it. How to produce? It's usually labor intensive in order to alleviate mass unemployment. Say in China, the population is so huge that if they shift to a capital intensive technology, the people might be um, out of jobs. So even if they're shifting to a capital intensive technology, they have to make sure that the people have jobs. So labor intensive technique makes sense there because there's so much um, workforce there. There's so many people who can work, right? So might as well give them work. And for whom to produce? The goods are produced so that there's sufficient for everybody in the country. Social welfare is a motive here, right? So sometimes even if the production of so many goods is kinda leading to a loss, they'll still do it in a centrally planned economy because social welfare is at you know the utmost import is of the utmost importance in such an economy, right? North Korea probably won't do it, but in a textbook scenario, they would. Next comes the mixed economy, our kind of economy, where what to produce is decided by the businesses, but the government can also regulate, right? Um, so there's no private producers of, say, defense equipment in India. Why is that? Because the government said you can't. Simple. So whatever I can produce, I can decide, except the government can regulate my decisions, right? It's not as confined and strict and rigid as the socialist or the centrally planned economy, but it's not as free as the capitalist or the free market economy. I, are you getting a picture as of now? Like thoda sa. A free market economy is way to the left. Uh, a centrally planned economy is way to the right, and the mixed economy somewhere in the middle, thoda sa from there, a little bit from there, mixed economy, right? How to produce? A mixed economy will decide depending on what the situation in the country is, in the economy is. Say in India, we have a lot of population, so we can actually opt for labor intensive technology. Having said that, our population is also highly skilled. Our workforce is also highly skilled. So we might actually put them into the tertiary sector. And remember tertiary sector from 10th class, agro, intermediate sector and tertiary. So our skilled labor, English speaking or what, highly skilled labor, we can put them in the tertiary sector and then put capital intensive techniques in how to produce, you know, say manufacturing sector में we can use a capital intensive. So tertiary में we are using labor intensive to produce services, and to produce goods we are using a capital intensive technique. That can happen depending on the country and the situation. It can change, right? And for whom to produce? The businesses will produce for whoever is paying the most, no matter what the economy is, right? But since we are not a capitalist economy and we are a mixed economy, the government will regulate. Sometimes will be interfere and say, no, you have to do this for the social welfare. Um, I don't know if you've heard this term called corporate social responsibility. You probably haven't, right? It's simply a, a, a legal requirement for big companies in India who are making huge profits. They have to give a small percentage of the profit back to the society, right? Remember all those Nita Ambani would come in those ads, no, where they're like giving uh, kids that cricket bats and opportunity to play and all. And if you're anywhere based around Bangalore, you might have seen this Akshay Patra initiative by, um, I think it's related to Infosys, maybe. So those kinds of things where the companies, the big companies, are doing their bit to give back to the society, right? That can that can be required by that can be asked by the government to be followed legally in a mixed economy. In a capitalist economy, the companies probably will not do anything to give back to the society, right? And we are coming to a very important part of the chapter now, right? Uh, it's a PPF, not your mom's post office PPF. No, not the public provident fund. This is called production possibility frontier. Basically, um, it's a graph that shows the possible combinations of two goods, right? You have a limited number of resources. You can either put all those resources into producing one good, or you can put all of that into producing the second good, or you can produce some of this and some of that. And like good one, you can produce a lot, but thoda sa good too. Or you can produce a lot of good too, a little bit of good one, or equal. You know what I'm saying? The combinations are depicted graphically in a production possibility frontier. Anybody remembering two states? Alia Bhatt answers, and professor is like, get out. You know, all of that drama. Never mind. So, a PPF is based on three assumptions, right? The resources are fixed. Uh, there's a given number of resources and it's fixed, right? And these given resources are utilized completely in an efficient manner, right? So, if I have 100 rupees as resource, I can buy say this one bottle is 50 rupees, okay? So 100 rupees I can buy two bottles, or say pens, 25 rupees each, four pens I can buy, okay? So a combination of these goods, I can be like, two I'll buy this because 25, 25, 50 rupees. 50 rupees I'll buy one bottle. Possible. I can also do one other thing, no? I can buy two of this and I can go home with 50 rupees in my pocket. Or I can buy one pen, 25 rupees. 50 rupees bottle, 75 I spent, 25 in my pocket. I can go home. Correct, no? But in PPF, we are assuming that all the 100 rupees I spent. Okay, so whatever resource I have, I have spent fully. Assumption in PPF, right? Moving ahead, the technology and technique of production remain the same. So, okay, so I have a machinery, okay, and I can produce with say some 50 kilos of plastic. I can produce 50,000 of this. 50 tons of plastic. I can produce 50,000 of these highlighter pens. Okay. And suddenly, Elon Musk pulls a Iron Man stunt and he brings this one new machinery which, with 50 tons, can produce 1 lakh of these. That's cheating, no? One PPF, the one I was drawing, I had technology only to do so much 50 ton, 50,000 pens. Now, Elon Musk pulled an Iron Man stunt and he made this one machinery where I could produce 50 tons of plastic, may say 1 lakh of highlighter pens. So, in that sense, the technology is not constant here. So, the PPF can't be drawn where the technology is not constant. I can draw it at either the Elon Musk level or my own 50,000 per 50 tons level, right? I can't compare these two, apples versus oranges wala, right? You can't compare those two. So those are the three assumptions. Very important, write them down. Moving ahead, right? So say good one, wait, good one bottle, okay, and good two plastic. So I have resources to produce four of these or one of these or two of these. We discussed this now. Same way. In this case, look at the table. Good one, if I'm producing 40, if I use all my resources for good one, I can produce 40 of good one, 40 units. If I put all my resources in good two, how much am I producing? 100 units. C case E. 100, right? And B, C, and D, cases B, C, and D show the combinations. So if I plot them in a graph, I'm assuming all of you know how to plot a graph. It's basic. Remember 8th class wala maths when you used to plot graphs? Same. You plot graphs, you'll see something like this on your screen. Um, right? There's point A where it's like good good one, which is on axis Y, 40 units are being produced, and good 2, which is on axis X, the horizontal axis, there's 100 being produced in case E. So A, B, C, D, E, it's like the table C. In case A, 40 of good 1 and 0 of good 2, right? Similarly, the whole graph, so PPF typically looks like that. It's concave, like this, to the point of origin. So y-axis, x-axis, point of origin, PPC. It's always concave. Why is it concave? We'll see next. Okay, let's move ahead. Ooh. We'll do this and then we'll go to why PPF is concave, or will we? We'll see. So, um, remember that assumption that we saw, where I was assuming ki what the 100 rupees that I have to spend fully. So that is called efficient and complete utilization of my resources. Correct? No. Say I only used, I got two of these 25, 25, 50 rupees. Oh no, wait. I got one of these 25 rupees. I got one of this 50 rupees. 25 and 50, 75, 25 in my pocket. Did I fully utilize my resources there? I did not. I underutilized my resources. Correct. No. I could utilize completely, but I underutilized them. Come utilize kara. Or I could be like, I want all of this. I want 2 bottles also, I want 4 pens also. But I don't have the money, no. So it is unattainable. So anything. What all combinations are attainable? 4 pens can I buy? Yes. Because 25 into 400, I have the money, I can buy. 2 bottles can I buy? Yes. 50, 50, 100, no. I have the money, I can buy. Can I buy both of these? I cannot. Because 100 rupees is, I don't have 200 bucks, no. So in the graph, point 4 and 5, if you can see, are directly on the PPF, complete utilization of resources. So in point 4, there's more of good one, and there's a little less of good 2, say, which is on the x-axis. And in good 5, there's a lot of good 2, but a little less of good 1, correct? No. But in both the cases, the resources have been completely utilized. Any point that is on the PPF means a possible combination of goods wherein the resources have been completely and efficiently utilized. Correct? No. It was in the assumptions, no. So any point on the PPF, which is in this case 4 and 5, point 4 and point 5, the resources that were available have been utilized completely and efficiently. But see point 1, 2 and 3, they are inside the graph. Correct? No. PPC, they are inside. So what does that mean? It means that the resources have not been fully utilized. I could have utilized them. I had the resources. I had 100 rupees. I could buy 4 pens or 2 bottles or a combination. But I only bought 2 pens and I went off home. Underutilization. I didn't utilize only fully. And 6 and 7, see, they are outside my PPF, which means I can't attain them only. It's impossible for me to achieve those goals with my available resources. Correct? No, because all the resources that I have completely, if I'm utilizing efficiently, then only I'm getting the PPF. No, so how can I get more output than I have? Correct? No, so PPF is the maximum that I can produce because all the resources that I have used completely and I've used perfectly, efficiently. So 6 and 7 are unattainable. I cannot achieve those goals because I don't have the resources. 1, 2, and 3, I have the resources here, but I am not utilizing them fully. Are those attainable? Yes, because I have so much. For one, to produce one, I have the resources, it's inside my PPC, but it's not completely utilizing my resources, correct? No. So, attainable 1, 2, 3, 4, and 5 are all attainable. 4 and 5, I'm using my resources completely and efficiently. 1, 2, 3, I'm not, I'm underutilizing. But all of those are attainable. 6 and 7 are unattainable. Simple, no? Let's move on. Opportunity cost. This is very interesting. Okay, so opportunity cost is the cost of the alternative foregone, right? So simple. Calm down, I'll explain. We saw this now, 25 rupees each, 4 pens I could buy, or I could buy 2 bottles of 50 each. I wanted both. Okay, I was like, I like both of them. Like, oh yeah, the bottles are really nice. I want. And then I'm like, oh yeah, the highlighters are also nice. I want all of these. But I got all four because I liked the colors a lot. But I couldn't buy these because no money now. 100 rupees इसी में हो गया. Correct now. So I didn't buy those. So the bottles are the opportunity cost for me buying my pens. That's all. That is opportunity cost. With 100 rupees, I would have gone to a movie on a Monday morning movie. But my next best alternative was these bottles. And I had to forego them. I had to let them go in order to buy these 4 pens. So the opportunity cost of buying these 4 pens is the 2 bottles. Simple. That's opportunity cost. So this good two, and case ABCDE, we saw this before in the PPF marking, remember? So opportunity cost, let's look at this together. Okay. So in the first one, I'm using all my resources for good one. Good one. I used all my money for this only. Done. Bottle zero. Correct. No. That is the scenario. Ashte. And then case B may I only produced 30 of good one and I produced 40 units of good 2. So to produce 40 units of good 2, how much good 1 did I have to forego? How much did I have to sacrifice? 10. Because case A mein I was producing 40, case B mein I produced only 30. So 10, no? 40 minus 30, 10. So to produce 40 units of good 2, I had to sacrifice 10 units of good 1. So 10 units is my opportunity cost. In case C, let's see this. Good 2, I produced 70. Good 1, I produced 20. First, if I used all my money for good 1, I could have produced 40 of good 1. Here I'm producing only 20. So to produce 70 of good 2, how much of good 1 am I sacrificing? How much am I foregoing? 20. 40 minus 20. 20 opportunity cost. Similarly, opportunity costs for D and E are 30 and 40 units. 40 units. See the E wala case. Opportunity cost is 40 full of good one. Why? Because good one has become 0 in case E. Because by case E, all my resources I've put in good 2. Correct, no? So good in case E, all my resources I've put off in good 2. I can produce 100 of those. But the opportunity cost of that is 40 units of good one. That's it. That's the concept. Okay. Test yourself a little bit. See if you can find out the opportunity cost of the bottles and the pens. You'll know if it's right. It's very simple. Do a little table where it's like I could buy 4 of these pens, or I could buy 2 of these pens, or I could buy 0 of these pens. 3 scenarios only. No. First scenario, if 4 I'm buying these, 0 I'm buying bottles. Second scenario, 2 if I'm buying these, I can buy 1 of these. Third scenario, 0 pens, 2 bottles. Make a table, see if you can crack it. It's very simple. Let's move it. Right. So I actually went on to Karnataka PU textbooks wala site, okay. You don't have this in your first chapter, so this is just for general knowledge if you want, but otherwise you don't even require this. Total opportunity, margin opportunity, not required. It's not there in your textbook. The textbook is actually not available. I saw this thing called MCQ question bank. Usme this is not there. So this is just for general knowledge in case you want to write down, but otherwise not required. Do not worry, do not get scared looking at this. Okay, it's simple. Let's move ahead. The characteristics of a BPF. We saw this before, you remember? I said, I said, PPF is concave to the point of origin. Remember, y-axis, x-axis, PPF is concave. Remember, why is that? Because it's because of this thing called increasing opportunity cost. If we, okay, don't worry, I'll explain. Let's go back. Here, let's see. Look at the opportunity cost column. Gradually, it's increasing. Do you see? First, it was 10, then it became 20, then it became 30. Remember? Do you see? It's increasing as we go ahead. Why is it increasing? Because of this law called increasing opportunity cost. It's nothing. It basically says as we go down the PPF, for each additional unit of good 2, we'll have to end up sacrificing more and more of good 1. Simple. Don't worry. Listen to me again. As we go down the PPF, for each additional unit of a good 2, we'll have to end up sacrificing more and more of good 1. That is the law of increasing opportunity cost. And that is why the PPF is concave. And then the PPF is sloping downwards. It's concave. Why is it concave? Because it's downwards. No. Why is it downwards? Because limited resources. The resources are scarce. Remember, I can't simultaneously produce 40 of good A and 100 of good B. I only have limited resources. No, I can't buy 4 of these and 2 bottles together. I can't. Correct, no, because I only have 100 rupees. So either I buy 4 pens or I buy 2 bottles. Correct, no. Similarly, it is downward sloping because either I put all my resources in good A or all my resources in good B or any possible combination in between. So it's downward sloping. Easy? Nothing to worry about. It is so easy. It's very easy, correct? No? That's it then. And with that, we come to an end to the introduction chapter. Um, Going forward, we will study something called theory of demand. Then we'll actually first see something called equilibrium. Then we'll go to demand and supply. I know big words, no, but they're simple only, like this only, simple. We'll see all of those. It's all good fun, trust me. And that's it. Microeconomics is pretty easy. You just need to, I don't know, have fun. Cool then. If you have any suggestions as to how I could uh, improve teaching, uh, leave them down below. If you have any doubts, also leave them down below, and I will get back to you. And again, I hope you're all staying safe, taking precautions, taking care of elders in your family, and good work. You're stuck at home, but you're still studying, no? Good boys and girls. So, yeah, stay happy, stay healthy,